Want to look inside the head of the world's best investor? By the end of this video, you'll know exactly what Warren Buffett is investing in and his favorite investments. In fact, he's put nearly $60 billion down on these stocks, and I've got 3 reasons why investors could see huge returns this year. We're talking Warren Buffett stocks today on Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in our community. Thank you for taking a part of your day to be with us. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. The Berkshire Hathaway equity portfolio includes just 42 companies for a total of $196 billion, and it's surprisingly concentrated in just 3 industries. In this video, we're going to be looking at Buffett's favorite sector, why he has nearly a third of his money in banking stocks. I'll also show you how to find the best stocks in the sector for huge cash yield and double-digit returns. Now, Buffett took the lead for the Berkshire Hathaway holding company in 1965 and has rewarded investors ever since. Returns on shares have climbed 20% a year over the last 38 years, more than doubling the return on the broader market. That means instant market buzz anytime the company files its Form 13F. That's the disclosure all large money managers have to file every 3 months. That look into Buffett's investments is what we're using for this video series on the Oracle of Omaha's favorite stocks. We're looking at Buffett's biggest investments, his favorite industries, and even his worst investment. We'll look at the stocks Buffett believes in, why he loves them, and how you can use all of this to find your own investments. So subscribe and click that bell icon to get notified when the rest of the series goes live. I'll also be putting a link in the video description below to a special playlist with all the videos. Now, we know Buffett's favorite company is Apple. He's bet over $44 billion in the iPhone giant. But taking a broader view of his investments reveals that he's also extremely bullish on one particular sector of the economy. In fact, Buffett not only has almost a third of his money in this group, but is also investing broadly across that industry. Now, Berkshire has invested $58 million in 7 stocks within the banking industry, versus a single bet or a few in most of the other industries. That tells me Buffett is not only loving a few individual stocks in the group, but he believes larger economic forces are going to support the entire industry. That means you don't necessarily have to pick the winners among bank stocks because these broader forces are going to mean solid returns across the entire index. Let's first look at some of the most recent changes in Warren Buffett's bank stocks. I'll then reveal why Buffett loves the banks so much and a few stock picks of my own. Berkshire cut its position in Wells Fargo & Company to come under that 10% ownership last quarter, but it still holds $24.7 billion in shares, its second largest holding. At the industry level, Berkshire added to its banking position with 3.7 million shares of U.S. Bancorp and 1.4 million shares of Bank of New York Mellon. Now, the fund also holds nearly $20 billion in Bank of America, though it didn't make any changes last quarter. Now, the financial sector has actually underperformed the rest of the market by about 5% this year and has fallen even harder over the last few months. It hasn't been the worst performing sector, but it's missed standouts like consumer discretionary and tech stocks by a long shot. Despite several increases in short-term rates by the Federal Reserve, long-term rates have barely budged. And that's bad news for banks because they lend out on those long-term rates and they pay deposits on those short-term rates. Higher deposit rates and lower loan rates, something called the net interest spread, means banks' profits have been weak this year. So what does Buffett see that other investors are missing? We're going to be getting into some deep analysis here, so bear with me. That upside to banks really comes from 3 big catalysts that we're just starting to see. The first is that consumer and corporate borrowing have rebounded this year, and the economy looks to book a solid 3% growth. Those low long-term rates have helped support the housing market and business lending, so we could see a big pickup in lending on that economic growth. Another factor is going to be the loosening regulation coming out of Washington. Right or wrong, the requirements that made banks hold a larger part of their cash back after the recession meant lower profit margins, and that's starting to get reversed now. The president signed the biggest rollback in banking regulation in a decade last May. It raised the threshold for banks facing increased cash holdings from $50 billion to $250 billion and did away with a lot of the regulatory testing for those smaller banks. That's going to free up cash to be lent out and means banking fees will come down. Last here is an increase in those long-term rates that banks collect on their loans. Now we're starting to see signs of inflation, and that general economic growth will push rates up as well. Those higher rates are going to breathe new life into the banks, and all three of these factors could bring investors back to the group en masse. Now on a value basis, shares of financial companies are some of the cheapest in the market. The sector trades for 12.6 times earnings expected over the next 12 months. That's right at the 10-year average multiple and a discount of 4% on the average valuation over the last 5 years. Compare that to the broader market trading at 16.6 times expected earnings. That's more than 15% more expensive than its own 10-year average. For those of you that want a broad investment, the SPDR S&P Bank ETF, that's ticker KBE, gives you exposure to 80 banks in the United States and pays a very nice 3.3% dividend yield. It's got a lot of those smaller banks that I think could do really well in those three factors. Even for investors that want to pick a few individual stocks, you might want to consider putting some of your money in that broader fund to diversify your risk more evenly across the sector. For individual banks, I love two of Warren Buffett's stocks in the banking group, and I'll tell you why. Wells Fargo & Company is higher by just 3.8% over the last year on accounting scandals and a rare hit to an otherwise strong name in customer service. The bank is the largest deposit gatherer in the country and a leader in the mortgage market, meaning it's going to win big when those long-term rates head higher. Return on assets has slumped to just 1 times this year from 1.4 times in 2013, leaving room for stronger profitability on management's turnaround plan. Non-performing assets have shrunk for 4 consecutive quarters, and the bank has been able to grow deposits consistently. Now, I'll admit that it may take time to rebuild the company's reputation after those scandals, but Wells Fargo has always had some of the highest marks for customer satisfaction among banks, and I think it can get there again. Shares trade at a price to book of just 1.5 times and pay a dividend of 2.8%. Now, US Bancorp is my favorite among regional banks and one of the best managed in the industry. The bank gets about 60% of its revenue from that core retail banking segment that's going to do well as rates rise, but it also books 30% of revenue in the faster growing payment services segment. Now, Warren Buffett owns just under 6% of the bank, and looking at its financials, you see why very quickly. Return on equity has averaged just under 15% over the last decade, one of the highest returns in banking, and way above the bank's cost of equity at about 9%. The shares trade for just 2 times book value, which is below the industry average, and pays a 2.4% dividend yield. Warren Buffett's investment in bank stocks doesn't really surprise me. They're cash flow machines with a lot of economic upside. In our next video, we'll be looking at one group of Buffett stocks that has me scratching my head. He's got a $9.3 billion bet on a group of 4 stocks that have historically lost investor money. Click on the link in the video description below to watch all the videos in the Warren Buffett playlist, and don't forget to subscribe to the channel. We're here Mondays and Wednesdays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about investing or money, just scroll down and ask it in the comments.